Welcome to Illuminati Silver. We tell it the truth about silver. Today is Saturday the 13th of February 2021 and we're publishing our gold and silver weekly update for the week ending the 12th of February. We also briefly look at political events and economic reports which could shape what happens to the US dollar and therefore, at least short term, precious metal prices. So let's take a look. Now first, before we look at gold and silver's performance, a quick shout out to two important videos produced in the last 2 days. Yesterday, $50 silver in a few months, ? And the day before, gold, where next? 1965 or $1,000? And we've placed links to both of these below. Okay, back to last week's figures. Gold rose $10 last week, from $1,814 to $1,824, having hit a high of $1,855 and a low of $1,808, a rise of 0.6% for the week. For interest and those who follow these things, its weekly high is lower than the previous week, but its low is higher than the previous week. In sterling terms, gold finished the week at £1,317. That's down £3. And in euros, it closed at €1,505. That's unchanged on the week. This essentially shows that sterling against both the dollar and euro strengthened. Silver rose 42 cents, rising from $26.96 to $27.38, having hit a high of $27.82 and a low of $26.73, a rise of 1.5 or 1.6 to be more precise percent. In sterling terms, silver closed at £19.77, that's up 15 pence. And in euros, it closed at 22.60 euros, that's up 0.22 euros. The gold to silver ratio fell from 67.2 to 1 to 66.6 to 1. Bitcoin rose just over $7,300 last week, and its price currently stands at $47,165. The Dow Jones closed on Friday at 31,458, up 27 points on the day and up 310 points on the week, after over a 1,100 rise the previous week. The S&P 500 closed at 3,934, up 19 points on the day and up 48 points on the week. And the Nasdaq Composite closed at 14,095, up 70 points on the day and up 239 points on the week. Brent crude, looking at oils, closed at $62.43, up $3.09, following a rise of $4.30 the previous week. And WTI crude closed at $59.47, up $2.65 on the week and following a previous week's rise of $4.65. This has now pushed either towards or above $60 territory, whether you're referring to Brent crude or WTI, which is where a number of OPEC cartel members have been stating behind closed doors where they would like to see oil prices move towards. Some analysts are even predicting $70 a barrel soon, though we're reserving judgment on that for the moment. But certainly this $60 seems to be the level that the cartel owners are aiming for and intend to try and maintain. Whereas we all know that, strictly speaking, oil prices should, in reality, be considerably lower if it was purely based on supply and demand. The dollar index stands at 90.48. That's down 0.56 on the week and reverses the previous week's gains. Now, our conclusion price trading range last week stated, quote, gold we see as consolidating and therefore forecast a regular price range of 1750 to 1850, with 1700 to 1900 being outliers. We're slightly downgrading these highs and lows slightly. Silver we see trading broadly between $26.50 and $28, with $25 to $29 being outliers. Now we can see that both gold and silver maneuvered broadly within the mid-range of these estimates, with gold trading between 1808 and 1855 and silver between $26.73 and $27.82. Now we produced, as mentioned at the beginning of this podcast, two interesting videos, one on gold, and where two diverse views were expressed as to where gold is heading, and a really quite bullish article podcast on silver, suggesting how theoretically it could actually rise to $50 within a couple of months. Interestingly, some of the comments received to that latter video actually stated that in some physical cases, silver is already virtually touching that price when premiums are taken into account. Which is a fair comment, save that we all know premiums will eventually go down, but much then depends upon what the spot price of silver will be at that time. Looking at gold firstly though, it traded within a relatively narrow band of just $47, with gold rising strongly on Monday and continuing through Wednesday, where it peaked, with a major fall occurring on Thursday through Friday morning, with a slight rebound towards the end of the day, mostly caused by a little bit of dollar weakness towards the end of the week. That said, from a technical point of view, gold broke below the 200-day EMA, and 1800 is of course an important support level, which it may attempt to breach. Underlying that is our much vaunted strong support level of $1,750, and should that be breached, which we doubt, but should it, then the prospect for gold becomes quite bearish short term. Now, as we mentioned last week, US yields are the statistic to watch, as at present these are having the major influence, at least short term. The 10-day moving average rests at $1,829, which is where gold is finding some resistance, and the short-term momentum has turned negative, and the fast stochastic has generated a crossover sell signal, while the MACD points to consolidation. Supporting gold, though, is that the Biden $1.9 trillion stimulus package is gradually receiving acceptance via many House committees, and it will be interesting to see what eventually will be passed, envisaged by the end of this month, if not sooner. However, to some extent, as we mentioned last week, it's very possible that this factor may already, to some degree, if not totally, been baked into prices. Silver, like gold, rose early last week but peaked on Tuesday rather than Wednesday, and actually ended the week strengthening towards the end. Again, though, operating within a relatively tight margin of just over $1 between high and lows. Support at $27 appears moderately strong, at least as a short-term support level, that is. Although it's breached it, it's managed to resurface above it, but $26 is seen as strong support. And there is some degree of evidence showing that buyers keep coming in between this $26 and $27 level. The 20-day EMA of $26.60 is where traders are focused upon currently. Of course, $30 is the key overall resistance that all eyes are fixated upon, as many analysts believe that once this level is beaten and held, the $50 target is certainly within sight, although admittedly in time, of course. There is no doubt that for silver's next move up to be regarded as convincing, it needs to stay above $27 and really start gravitating between $27.50 and $27.75. Now, economic data announced last week showed that the Consumer Price Index rose from 0.2% to 0.3% in January, and core CPI remained unchanged at 0%. Initial jobless claims fell from 812,000 to 793,000, and the continuing jobless claims also fell from 4.69 million to 4.55 million, though an improvement not really as good as some economists anticipated. The Consumer Sentiment Index, the preliminary one, rose in Feb to 80.8 compared with 79 in January. Now, if we look ahead to next week's US economic data, we have the following being announced. On Monday, it's President's Day holiday, so nothing scheduled there. On Tuesday, we have the Empire State Manufacturing Index for February. Now, a more important day, Wednesday, because we have retail sales, the Producer Price Index, the Industrial Production Level, and Capacity Utilization, all for January. Thursday, Weekly Jobless Claims Report, as always, together with Housing Starts and Building Permits and Import Price Index for January. And then on Friday, we have the Flash PMIs, the Market Manufacturing and the Market Services, both for February, and existing home sales for January. So, like last week, Wednesday is probably the most important day today. All eyes again on Thursday's jobless claims and Friday's Flash PMIs. So, where does this leave us for gold and silver prices next week? Well, gold we still see as consolidating, frankly, and therefore forecast, again, a regular price range of 1750 to 1850 as normal trading, with as low as 1700 at the bottom end and 1900 at the top end being what we call outliers. In other words, they may dip down to those, though we're not really expecting them to either break 1700 or to break 1900 to the upside. Until key support or resistance levels are broken and held, we still envisage really quite a tight trading band there. Now, silver's interesting, as there is to some extent a physical squeeze. There are some discrepancies between certain dealers across the Western world, some who claim to have stock and those who do not. Certainly in America there does appear to be a shortage. And we were a little impressed by silver managing to pick up late on Friday. So broadly, our trading range still remains within 26.50 to 28 as a norm, with 25 to 29 being outliers. Of course, if the silver squeeze continues or it gets worse, and the stimulus package is announced, and we see a slight fall in the US dollar, then quite likely silver prices will be towards that upper end of the range. There will be a breakout at some point, potentially in either direction, though to be fair, the odds at this stage are more to the upside for a breakout than the downside at the moment. Now, tomorrow we shall be publishing episode 11 of Bitcoin versus Gold and Silver, so if you follow Bitcoin, don't miss it. As we stated last week, we were expecting a second move up, and this has happened. And again, we see no real reason why its rise cannot continue into the months ahead. Meanwhile, share your thoughts on what we've covered today. Thank you so much for listening. If you haven't done so already, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And as always, we wish you a safe, enjoyable weekend and most prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.